Hey guys, Sunday morning, 8:41. Wanted to do a quick video to kind of show you guys some things looking for what we're looking for next week in the market. The S&P 500 back tested the what everybody's calling the head and shoulders, which it's different than my head and shoulders. And the market's had the opportunity to break down. If we look at the daily on the S&P 500, the 1-year daily, we've back tested that descending trend line a couple times. And this is a weekly actually. Let's look at the daily. And if the market wanted to roll over, it simply would have done that and shaken a lot of people out. But this is actually bullish action, as bad as a lot of people are going to make it out to be, that we're back testing and we can't get above the S&P 500. They're going to lead you to believe that next week we are going to crack down. They're going to talk about, Elliott wave theory, wave 1, 2, 3, 5. They're going to give you all these different technical jargon saying this, that, and the other thing. But you have to look at market psychology, and market psychology says that if you backtest a breakdown and you backtest and retest it again and then retest it a second time, you're most likely going to go into a consolidation period. You're not going to fail to the downside. And I've been trading for a while, so you can take whoever's opinion you want. Look at the S&P 500 on a weekly. Let's look at a 10-year weekly. And there are some things that we didn't like on the daily, but there are some things that we do like on the weekly that we see. We see there's plenty more room on the upside on the RSI. We're probably headed into some type of consolidation period because these we consider the 44, 43 and above are our consolidation areas, where as long as we hold them there, we're pretty good. As far as the daily crossing over bearish on the MACD, we're actually looking to cross over to the upside on the weekly. And as bad as we looked on the daily, let's look at the daily, and then we'll go to the NASDAQ. As bad as we looked on the daily with our McClellan oscillator, correct? We went up and made a high, and now we've broken back down to the red center trend line. We've seen that happen before in times of sharp sell-offs and consolidation. And we didn't like to see this look, obviously, here on the oscillator, where we made a lower high. That was a little bit of a red flag, and now we've kind of corrected down into the lower channel. Which is kind of a consolidation too, if you look at that in a way, in a perspective of the overall average stock. And you look at the crossover here on the daily, and people are saying, okay, now we're going to break, but the angle of that crossover does not look like the angle of this crossover at all, where you're breaking further down to the downside. It's actually starting to curl up, and we're kind of hanging out in this area here. So if we go back to the weekly on the S&P 500, and then we'll get to the NASDAQ and then the XLF financials. If you look at the weekly, you're going to see that on the McClellan oscillator, we've actually hit a low, a very, very, very low, and we're actually pulling back up inside the center channel lines, which we want to see for consolidation. The last time we saw a low, this low, was the big sell-off in this time frame here. We've actually broken a lower low across the board than we've seen in the last 10 years. And to get all the way back up in this consolidation channel here on the broader averages is a bullish sign long term, not a bearish. We don't like the action short term. It told us that there was a correction coming, and we were correct this week to say that we're expecting a pullback and to be open to the possibility that we could back test and break down, which we did not do. We did not do that. So we had the opportunity to do it. Call it whatever you want. Call it the plunge protection team. It is what it is. Look at the QQQ here. Same thing. I did what I did was on the QQQ, I did a weekly channel, like a psychological weekly channel. And what I mean is that these are transitionary periods on the QQQ. I mean, is it just coincidence that we went back down and tested the 200-day weekly average on the QQQ and bounced like a rocket off of there? I don't think so. I mean, there we are, touching it on the tail to the penny. So these channels I built basically are psychological channels, meaning that when we rolled back up here back in May, a couple years ago, you can see we pulled back and we retested the 50-day, 50 weekly moving average, and then we bounced. And we retested this line here on the weekly, and we had a little bit of a hesitation, because if you look at the weekly close, it closed on that descending line twice and then pushed through. Then we back test that line and we kind of hang out and close on it and right below it just by a hair. And then we push back up above it and back test on the tail on the weekly, and then we're off to the races. So this is a very important transitionary line between a bearish and bullish psychology. This was the very first candle before we took off to the upside. We caught the tail on that with this descending trend line. Then we obviously have some history behind us where we hit the high here. And what do? We go back and back test that same channel line, that psychological channel line. So more than likely, if there's any corrections to be had with significance, more than likely we are actually going to go up and retest that descending top end channel line from the psychological perspective, in my opinion, which puts the NASDAQ, as hard as it is to believe, in the 230s depending on the time frame, which would blow a lot of people's minds, right? You have a MACD crossover positive on the weekly on that as well. Look in the XLF. Did the XLF give us a little bit of a red flag? Absolutely. Did it break down below its multiple lines? These are weekly, so let's switch to the daily. Absolutely. And is it a little bit of a worrisome area to be looking at? For sure. And that's something we need to be watching too, that we don't break that lower trend line. Let's look at the daily. Sorry about that, guys. It's important that we don't. So is it a make or break index? It could be if we break down below that line, but it doesn't have to go far into the upside for the Qs and the SPY to break to the upside either. And most likely we're just entering a consolidation period. We'll call this the panic zone on the bottom. This was the overbought period on the top. Not really overbought when you think about it from a bigger perspective, because it just lost momentum, and we could say this is the top channel on the financials, and now we're simply in the middle channel. We rejected that horizontal support with big volume here. Obviously, it could have been short covering, but that will tell us a little bit more next week. And then I told you we're probably going to just trade inside of there. Don't go shorting the financials just yet. The risk reward's not there. So this could just be burning time off the clock going sideways while the other indices go higher. That's my opinion right now on both the S&P 500 and the QQQ. I'm looking for some sideways consolidation before I move higher. We are below some of those moving averages on the weekly as far as the S&P 500, but we're well above them on the NASDAQ. And I think this is going to fool a lot of people moving into next week. We're back above my lower trend line that I drew on my head and shoulders. We actually put a tail through it, but we closed above it, so you can follow wherever you want, but I have a feeling that next week is going to be some sideways action in the S&P 500, retesting this channel before pushing back to the upside, and some upward movement most likely in the NASDAQ. So it's going to be some great trading next week, in my opinion, and it's going to catch a lot of people by surprise.